Good morning, everyone. Paul Duncan here from GammaEdge. Today is Friday, March 11th, my wife's birthday, actually. Let's go ahead and get started. So the red light up top really shows you how we're interpreting the index structure. You can see when we look at the winged plots, which are available in the Discord for each of the major indices, you can see that the red wings are dominating, meaning that we are in a negative gamma condition across the board. There are pockets, of course, of stocks who are bucking the trend, but just be aware, everything here is still very negative. Expect higher volatility. The market model yesterday failed to advance. We did not get the continuation up that we were expecting, so we're still very, very weak. Breadth is still very bearish. Did have a little bit of a turn in the afternoon from the institutionals, so that is positive, but in general, just be aware, we're still very weak. So we're going to color that red and yellow as cautionary. From the ES perspective, more of the same. The overnight gap up due to potential news out of the Ukrainian situation is positive. We have a drop in VIX, as you can see down here. We've got price advancing up over the negative trans level. In general, we're still below the zeros. We did see different levels shift around, but overall, we're not seeing a huge bias upward or downward. I think the keys here are that there's balance. So we're going to color this red and yellow for now. Positive on the drop in the VIX and the price advancing up towards the zeros, but in general, we're not seeing a tremendous edge. So our collaborative work with EdgeRater allows us to actually look at different scenarios back over a 9-year history. And when we take these gamma levels and we put them in, we configure the tests and look at what comes out, we do have just a minor edge upward, but extremely fat tails. Typically, we're down below 7% in standard deviation. You can see here we're at 17. So that means you could have some really wild gains, but you can also see the distribution to the downside as being some pretty significant losses. So definite caution, but color this with some bias upward. The VIX is cooperating. The volatility of VIX is volatility of vol, is sitting on top with the VVIX, and you can see this has closed below the 20-day MA, and you can see the actual VIX now is coming in below the 20-day MA on the Bollinger. These are both constructive, and again, we're going to color that green and yellow here as something to watch. I would play short calls to the downside or a spread to the downside to take advantage of any significant drop in the VIX. When we take a look at the PM settled, and which is the SPXW, and the AM plus PM, which we call the combo here on the right, still looking at about 3% expected move. A value of 32 in the VIX implies a 2% move. So this expected move is the open high-low close, and it's the outer range of what we're expecting for the day. So if you're going to take any trades on the 0 DTE, take a look at that, where that 3% level is, and we think you could be setting up for some opportunity there. I still want to highlight for everyone that we do have a significant line in the sand at 4,000. So if there's any premium below 4,000 that you can grab, you might want to think about that. And I also want to highlight the JPM hedge structure that expires at the end of the month. That is becoming more dominant. In fact, in terms of hedging shares, its level is the most dominant in the SPXW. When we take a look at the 0 DTE, Circle 1 shows that this is indeed the single expiry for today. Still net negative gamma, still fairly weak though too, and so we don't have a lot of push one way or the other. We're going to open up somewhere near here by Circle 4 in this 4,300 range, just due to the overnight gap up, and that's going to put us in the positive gamma region, which is going to actually put all of these puts that were down here associated with this negative gamma out of the money. So any intrinsic value that was there into last night, which would have been in this area here, is now, this area here is now going to be gone. And so we may see a monetization for today, which could be fairly significant. I think the gap up will cause some dealer hedging and possible drop in the morning, and that'll be counterbalanced with everybody wanting to monetize the extrinsic value that they have in the remaining option positions, and that could counterbalance any drop from the dealer response. When we take a look at the expiration profile, yesterday it was around 111,000, and you can see now it's at minus 89,000. Why this is significant? This becomes the fuel for a push upward, but since it's dropped already, part of that is the rise in price. We didn't really advance much yesterday. So this was monetization. We had some closing of puts, and that drops the negative gamma on that side of the equation, effectively causing it to rise. And so we're actually seeing some of that monetization already starting to occur. Finally, when we take a look at the SPX net negative gamma condition, still very, very negative. We are not digging out of this hole, and everyone should be aware of that. Again, I think we're going to open this area around 4,300. That could cause a dealer response to drop, but the monetization down here of any remaining value could cause these folks to counteract the drop in dealer response, and we'll have to see what's going to happen here. I do want everyone to pay attention though. 4,200 is still in play. 4,100 down here at circle 5 is a big deal. And then over here at circle 6, just take a look at the numbers. We've got 28% of the complex expiring on the 18th. And then we have other values, including today, 5% today, and some smaller values in between now and next Friday expiring, all push into about 35% of the SPX complex right now is going to expire between now and next week. That's a significant amount on a $6 trillion asset. So think about that. About $2 trillion of the SPX is vaporizing over the next week, and that money's got to go somewhere. So that's it for today. You can find us at www.gammaedge.us. That'll take you to a sign-up page to our Discord, 14-day free trial, all the tools turned on. And of course, you can follow us on GammaEdges. And if you're watching this from YouTube, please like so that we can get boosted up there in the search engines, etc. So thanks, everyone. Don't hesitate to ask questions, and we'll see you on the Discord.